What is up, everyone? I see there's a couple people in here already, and I appreciate you immensely. Oh, I know it's just Fudbucker. Hey, Fuddy. All right. So, probably not going to get a lot of people. I've really been slacking on my YouTube channel. I've been slacking as a content provider, but I have a reason. So, I'm going to get a couple of administrative things out of the way. So, the first reason I've been slacking is because there's only so many hours in the day, and I do have a day job. And I have around 50 people in my Patreon who give me anywhere from $25 to $50 a month. And I believe it's a job, because it is, that I must provide as much value to them as possible. So I've been really concentrating on that, doing some things for them. The second thing I'd like to preface before I get started in the fun stuff is, you know, Chris and Amit have known me a minute, but Vitali and Carlos really don't know me. They know I exist, but they don't know me, right? And to their credit, I don't think that they knew that I was autistic or on the spectrum, right? So it is what it is. They interrupt and they do things because they don't know me. I don't like to all the time say I'm autistic, right? Because it comes off as a crutch, and maybe like almost like I'm fighting for sympathy, right? And I don't want any fucking sympathy. I just, if I ever explain it, I do that so that you know why I am basically completely obtuse to like social cues, or why I have the inability to be succinct. I give extra detail on everything. It's not easy. I know that this is an issue. It was an issue when I was in the army, and it will always be an issue, and I can't really change that. And I've tried. I'm a 43-year-old man, and I can't really change it. So anyway, what happened yesterday is, I went on Amit's podcast, Finance Junkies, with Amit, Carlos Vitali, and Chris Patel, and they have a great chemistry together. They have a fun podcast, and it's about finance most of the time. But Vitali and Carlos, and they suckered Amit into liking it a lot. They love Enphase. They love Enphase out, and they've made a lot of money, and good for them. However, they are delusional. They have reached delusional bull status. I believe some of it is because they are like one of the faces of Enphase, so they kind of feel like it's their duty to promote it, you know. And I also went on there because Chris, which you got to give him credit, because what he did is way harder than what I did. Chris was able to, in some kind of way, find that Weight Watchers, ticker symbol WW, was extremely undervalued by his metrics. And he saw that insiders were buying. So then he entered a position at a great price. And then when it went on its run up, according to Chris, he was upward of 100%, right? He more than doubled his money, right? So then, after Chris going on and on about it, so much to the point when they had a guest on, I guess it was one of Vitali's friend or Carlos's friend the other day. Chris, it's human nature. He was boasting about Weight Watchers. You should get into Weight Watchers, and telling this guy to get into this I almost cursed, into this piece of crap stock, because I say it's a piece of crap because at the current valuation it is a piece of crap, and I'll explain. And he was boasting about it, telling him to get in, which was completely not Chris's style, because Chris's, of all the people in this YouTube finance world that I actually talk to, Chris is the one that knows the most. He doesn't just talk crap. Like, he has actual knowledge of fundamentals and technicals. Well, not so much technicals, but definitely fundamentals, and he understands options to a high degree, right? And I was beside myself. I was like, Chris, what the F are you talking about? Weight Watchers is a horrible stock at this price. So when he did that, I'm like, I looked at it. I looked at the fundamentals. I looked at the technicals. Long story short, the fundamentals are a poop show, right? And the technicals are screaming overbought, meaning like it's about to sell off hardcore. And it did. The fundamentals, despite what Chris tried to say yesterday, but I tried to just keep as calm as I could. Are completely irrational. They long story short, they don't even have a price to book, and they're not profitable, so they don't have a PE. And their situation, their financial situation, if I remember correctly, was about $1.8 billion in liabilities, debt, etc., and $1.02 billion in assets. So basically around $800 million deficit, like in the negative, right? So what I predict is going to happen, and I've covered most of my position, is I predict that Weight Watchers is going to very, very soon do a capital raise. If they don't fall off a cliff and go back down to those prices. But if they stay elevated, like, I don't know, above $6, $7, if they stay at that price, they will do a capital raise because they need cash, regardless of this new acquisition that they had. So Weight Watchers was a pretty quick conversation. I made a lot of money on Weight Watchers. I made around $10 billion. No, $10,000. It was like a 2 or 3 day trade. It was really good. Really easy to do. Not hard. Once you know what you're looking for, it was easy. This stream, now we're going to get into the good stuff, guys. This stream, which took me out of my hiatus, is because most of the time when Chris wasn't making like disrespectful facial gestures, or when Amit didn't look exasperated and bored, or when Carlos or Vitali weren't interrupting me, I was able to get a couple words in. But most of the time, those words were completely misconstrued, misunderstood, or completely taken out of context, right? And I have the link to the actual debate below so you can look at it. So this stream is so I can talk about some of the key points that I remember. Like, this isn't going to be long. I'm not going to watch it and then talk about it. You can watch it if you like. But in the comments, which we will talk about, there was also a lot of good comments. So I'm going to talk about a couple of those things. So the first thing I want to illuminate, which was the biggest reason that made me short Enphase, and I made a really good amount of money. I shorted Enphase at the top, like almost the tippity top, and I made a good amount of money, and it wasn't like a small short either. I think I shorted like, I think it was 50K or something like that. I don't recall. I really don't recall, but I did make good money. I actually covered the short too early because it dropped a lot. So and I brought receipts, so you guys are gonna see. Okay, all right. So let me show you. First, let me show you this. Okay, so let me share my screen. Share my Fluck button screen. There we go. All right. Okay, so on the screen, and I use Seeking Alpha because it's the quickest one I found. But this right here is the Enphase Form 8K. This is when they announced the stock buyback, right? And guys, hopefully I teach you something today, because this is just one. Whoops, email showing. This is just one. I don't care. You guys can email me if you like. This is just one of the many dastardly things that is possible in the world of stocks. Like, there are so much that you guys don't know, and hopefully I can just clue you in on a couple things today. So this is the notice of buyback, right? And long story short, you can see that This is dated May 17th, 2021. Okay, May 17th, 2021. Now, Enphase at the time, yeah, they were profitable, but their PE was horrible. But again, this is 2021, right? 2020 and 2021, not really made, you know, 2020 and 2021 were for the most part like really bullish years, and it was a time of quantitative easing and lots of money, and the market was bullish as f, right? Bullish AF. And what they did then wouldn't fly today because of the macro. But long story short, they did a buyback, right? And that's when I heard about this PR, because this was also a PR. I was like, what the f is going on? Because I've never been tracking Enphase because they were just all BS in my opinion. I don't believe in the management and the company. Yeah, it did good. It had its time. I don't believe that they are going to be a great company going forward. I believe they are replicable, but I haven't done extreme deep dives. But what I do know makes me stay away. All right, so let me cut to the chase. Okay, so now you know that. So now, this is a tool I use. I'm not getting compensated for this. I actually pay to use this. One of my actual friends in this world of Tom Nash, he has a great product called Stock MVP. I've just got used to this, and I'm one of those people that it's really hard to get me off of something. I'm like an iPhone. I have an iPhone, and I'll never go to Android, right? Okay, so why do I have this? If you notice, I have shares outstanding and stock price. Okay, so now this green light is shares outstanding. So we're gonna go to May of 2021, right? May 17th, 2021. On May 17th of 2021, Enphase had 135 million shares outstanding from the peak of, which was around here apparently, to 135.7. So it was a, I guess it's not enough to actually change the number because this graphic is still saying 135.7 no matter where you are on it. But we're at 135.7 million. So why am I bringing that up? So this company on a dip, right? They knew what they were doing. They were very, very smart. They announced a up to $500 million buyback, right? That wasn't started immediately. But it didn't have to be started immediately. But anyway, they did do 200 million buyback immediately, or close to it, right? So what happened? Their price started shooting up, as it should, right? Because you are giving shareholders what's called shareholder equity. If you have a slice of a piece of a pie of a large pizza, let's say there's 10 slices and you own one, you own 10% of that pie. Now, if that pie is cut into 20 slices, now your ownership just got cut in half. Conversely, if that piece of the pie goes from 10 slices to 9 slices, now you own a little bit more of the company. And that's basically shareholder equity. It's the opposite of dilution. When great companies do share buybacks, and they do, but not like this. This was far from a great company. It's to give shareholder equity. Now, here is a dastardly thing that this mother effing company did. Right? It should be illegal. They knew what they were doing, and I have more receipts. What they did is that once this happened, they ramped up. And when I say ramped up, I mean like in exponentially. But this isn't just conjecture. I'm about to prove it. What they did is they exponentially ramped up what's called stock-based compensation. It's basically through warrants, options, or a couple other ways. They gift, almost like gifting shares to people, right? So, boom. This is the 2022 yearly earnings report for Enphase. Okay, this is the Enphase Energy report. So page 123. To prove that I didn't just doc this up. This is the form 10K for Enphase Energy, dated. Where's the date on this mofo? Dated December 31st, 2022. Okay, so now back to page 123. Okay, so now on this yearly report, you have the entire years of 2020, 2021, and 2022 stock-based compensation awards, right? And then come down here. In 2020, they basically awarded 1.494 million shares. Okay. And, that is not a crazy amount. Look what they did in 2021, which just so happens to be the mother effing year that they did this stock buyback. They more than what? They more than 4x'd their stock-based compensation. Why did they do that? Well, I'll fucking tell you why they did that. They did that because they knew they were overvalued, and they knew that this is their chance to make millions. Listen, I'm not going to take hours going in here and showing you exactly how much they made, but look it up yourself. The insiders profited, realized gains of millions of dollars off of the backs of shareholders that thought they were getting shareholder equity, meaning a bigger piece of the pie. But they didn't. This proves it right here. They went from here to around where they started this buyback, did the buyback, and then diluted the shit out of it to right back again where the fuck it was in the beginning. I'm not making this shit up. Okay, guys, look, it's right here. Now, fast forward to today, they have 136.4 million shares float, which is more than the 135.7 million shares. So basically, long story short, they have more shares float today than they just did last year when they did their $500 million buyback PR. Okay? So that was my primary problem with the thieves and the fraudulent mother effers of Enphase. Plus, their fundamentals didn't line up. They didn't line up. So yeah, I shorted it. And I've brought this up to Vitali and Carlos in their own Discord many times. And they've always, snobbed at me. Never replied, never gave me an answer. Can't explain it. Would only throw shade because I like Palantir. So their response was always throwing shade at Palantir, right? And then yesterday on the debate, what they did is that just like a delusional bull does in so many stocks that we all know today, Palantir is one of them. They make excuses. When I illuminated this to them, they made excuses. Oh, well, they deserve to make money. No, listen, there's a difference between stock-based compensation that's legit, like they had in 2020, and then 4xing that motherfucking stock-based compensation to what they did in 2021 after they told their shareholders, we're doing a buyback for the shareholders. Yeah, bull mother effing poop, right? Okay, so that's that, right? That's that. So now I have only a couple more things to say. And because I want to clarify things that was said in the debate, because they didn't let me finish, or they interrupted me, or they spun it out of control. But I've been ignoring the comments, so I'm gonna go to the comments to see if anyone asked me anything. Okay, good. There's not that many comments. Good. All right. Fuddbucker said he loves gold. Thank you, Ricky. I appreciate that. Fuddbucker missed something. Okay, you got to get the kids in bed. Well, I don't have kids, so that sounds like a you problem. I'm just kidding. Great info you shared yesterday. I like the contrary take. Yeah, they're delusional. Enphase sucks, and WW sucks. Weight Watchers. What are your thoughts on Sofi? I am long, but would like to hear your bear case. They aren't profitable yet either. Okay, Ricky, I'll give you at the end. I'll do a short session where people can ask me to look at something for them. I always like to do that. I enjoy giving quick valuations and sentiment, both technical and fundamental. Rule number 1: investing thou shalt not FOMO. Right, fear of missing out. Agreed. Amit did a horrible job of moderating the debate. Yeah, well, Amit's a very charismatic guy. He did, he was very nice to me by even inviting me on. The only thing I didn't appreciate is the disrespectful like faces and comments of exasperation. It's like, but that's Amit. He's a young kid. It is what it is. Someone get Vitaly in here. Yeah, please do. Please get Vitaly in here. I'll even invite him to the mother effing stream to defend himself. If you guys can get him in here, I'll invite him. Well, we can even do a pod later. I'll take Vitaly and Carlos at the same time. No homo. We can debate and I'll bring receipts and we can prove how much of a poop show Enphase is. Like it is uninvestable at this price, in my opinion. This is always why companies do share buybacks. It benefits C-suite execs, period. That's not true. But so great companies do share buybacks for a couple of reasons. The first reason is that there's tax benefits to doing a buyback. The second reason is like legit shareholder equity, right? Shareholders like to know that their piece of the pie isn't getting smaller, it's getting bigger. All the great companies have or provide shareholder equity. You look at Apple, you look at Google, they really don't dilute anymore. Great companies, profitable companies don't dilute. If you look, which we will if you guys stay, great companies, their share float goes down, not up. Shitty companies, their share float goes up because shitty companies use capital raises, more cash to keep on running the business and to dilute shareholders, right? That's why retail investors who don't know what the fuck they're doing, with that whole door mentality, always lose. Like a savvy investor, like it is hard to pick individual stocks. Over 90% of people are better off investing in the NASDAQ 100 or the S&P 500. If you are going to go outside of that safety net, because at least in that, that the market will go up over time because it's been proven to do so for the past 96 mother effing years, then you have safety. You're not going to get world breaking returns, but you're safe. So now if you want world breaking returns or the chance of it, you got to take risks. But if you're going to take risks, you got to know what the F you're doing. You can't just, buy and hold and diamond hand it, because every investor needs to have an exit strategy. And that simply means, in short, to know when to sell for whatever reason. It can be a technical reason. It can be a thesis reason. I mean, I can go on and on, but there's many different reasons that a savvy investor would close their position. Standard operating procedure of why companies buy back stuff. Well, I already said that. No. Can't we all get along? I get along with everyone, Kelly. This is just, I don't hate them or anything. I'm just content. I'm providing content and understanding. I think I'm providing knowledge and understanding. Brian, I feel like in general, you are too easily gotten off topic. Maybe notes or something to help keep you on track and keep others from getting you off track. Yeah, Brian, you must have just joined. Like I prefaced this whole show with, you're right, by the way. You're right. I do. Like, I'll never fucking forget it. A quick story. I was in Iraq. This is 2005. I was in Iraq. I was the commo sergeant. My MOS was 25 uniform, single support system specialist. And I had 3 soldiers under me, and I had to go see the first sergeant, right? And one of my soldiers did something wrong, and so I had to go see the first sergeant and tell him why my soldier was effing up, right? And then he's talking to me, right? And I don't remember why, but I looked away because something happened. And I was at parade rest, so you're not supposed to do that. And my first sergeant, we were very cool, great man. I love him to this day. He's the one that promoted me to sergeant downrange. He said, He said, "God fucking damn it, Sarmiento, you have no fucking attention." By the way, I wasn't diagnosed yet. I was diagnosed very late in life at 38 years old. At this point, I wasn't. And he said, and I'll never forget it. He said, "You're like a fucking squirrel." He's like something happens, you're like squirrel. So yes, I do get. I think that that's something attributed to my condition, which I don't seek any sympathy or anything. I'm just letting you know. You can understand it or not. I don't give an F. I'm just telling you. Okay, so back on track, right? That does happen, but they also interrupted me a lot, by the way. Okay, love you too, Kelly. And thank you for your okay. Thank you. Appreciate that. Okay, so I got through all the questions. All right, here we go. So now what we're going to do is look at some of the comments, right? Look at some of the comments because I want to answer them. So we'll start with this one. This guy said, Gabe giving Chris a hard time about not taking profits on Weight Watchers, but also complaining about the Enphase C-suite taking some profits on Enphase. And then Mother Flipper says, good point. And I go, complaining is incorrect assessment of reality, blah, blah, blah. I didn't do that. So Chris is an individual investor and trader. All right. When someone is up over 100%, and, I'll say this again, when you're up a certain amount, diamond handing is wrong. Diamond handing is wrong. Whether it's technical or thesis based, fundamentally based, when you're up a lot and over 100% in a couple of days or weeks, I don't know how much it was, is a lot. You need to see what's going on and do it. So, for example, what I did on Twitter to Chris is I said, Chris, you might as well take advantage of what's going on here. You might want to sell covered calls on your position, or you might want to put a trailing stop loss or something. So I just wanted to address this fucking question because totally took what I said out of context. I wasn't giving the C-suite a hard time for fucking selling, and I wasn't giving Chris a hard time for not selling. Chris as an individual, if he was savvy, which maybe I give him too much credit, but I do believe he is, could have done something to protect his investment and not pay back all those unrealized gains. And what the C-suite did was just criminal, in my opinion. Now, it wasn't actually criminal, but it should be. But they definitely got around it. So it is what it is. Okay, so then a lot of people were just complaining about me. I'm annoying, blah, blah, blah. You're right, I am annoying. There's at least one more good one. This fucking guy said I'm a liar. I don't fucking lie. So yeah, and then I said, all right, bitch, tell me what I lied about. And no reply, of course. Fucking keyboard warriors. Okay. Yeah, this one. Okay, here's good. This guy, Leander, at 16 minutes, he says, the guy basically says, if you don't buy actual shares by exercising the options that you bought, then you are not an investor, but a trader. Even if you are buying options that are several years, which are called leaps, because you are not actually holding the stock. So investors and traders are differentiated not on timeline and DD, but whether they want to have the stock actually in a portfolio or not. And during the time where you have the options, you do not own the stock the whole time. So you are not invested, hence not an investor. I mean, the point is a coherent point. But I would disagree that this is the definition of being investor. And then fucking freelancer finance, Vitali. This is definitely Vitali. Oh, yeah, it is Vitali because they put the V there. Yeah, silly belief system that guy has. Leaps are sometimes better than shares, especially if you buy in the money leaps of highly undervalued companies, blah, blah, blah. Let them fucking explain to you what actual undervalued is. Let them give you a valuation, because that's one thing I see a lot of people say that don't really know what the fuck they're saying. They don't really understand what an undervalued company is, like metrics based. And then he deflected by it. I don't see the point of getting caught up in semantics of these definitions, to each their own. And that was Carlos. He's the nicer one of the two. And then I defended myself. I was not able to finish my points because I didn't. They fucking interrupted all the time. You do not know my point because I didn't finish it. I'll make a video to finish it, and that's what this is. This is literally the comment that made me make this video today. So last thing I said is leaps are always better than shares if used correctly. I'll say that again. Leaps for an investor are always better than shares if used correctly. So I will define that as I attempted to yesterday. If you have $10,000 and the stock that you want to invest in is $100 a share, your $10,000 will buy 100 shares. Now, that 100 shares will never expire. So you can technically hold it forever. Now, if that goes from $10 to $9, you've lost $100. If it goes from $10 to $5, you've lost $1,000. If it goes from $10 to $5 a share, you've lost $5,000. But it's unrealized losses because until you sell, you haven't really lost anything yet. Now, why are leaps better? Well, there's a couple ways. From a risk perspective, as I said right here, leaps are always better if used correctly. They provide unlimited upside in the time until they expire, with defined downside and around 77% less capital required. And I use 77% because anyone who knows anything about buying leaps buys in the money leaps with a delta of 70 to 80, right? And usually, but not always, you're basically using about 33% or less of the capital to get into that position and get that unlimited upside. But the capital you had that you need to use, which in this case is $10,000, would only be like $3,300. So I can get a leap that expires in 2-3 years on something that I think is going to go up and spend only $3,300, leaving me with $6,700 left of capital. Now, I still have control of 100 shares because every contract represents 100 shares of the underlying, right? But I cannot lose if I am completely wrong, like for some poor soul that buys leaps on Enphase, for example, today. If I am completely wrong, I am bullish on something, but in 3 years when my leap expires, the stock didn't go up. The stock fucking tanked. I can only lose the money that it cost me to buy that leap. My defined risk is $3,300. That's it. I can't lose more than that. The leap will expire worthless, and that's it. I will now have a capital loss of $3,300, which you can claim as a capital loss. However, if you're a poor soul and delusional and a moron and don't know how to do fundamental analysis, and you buy with $10,000 100 shares of, let's just make a random example, I don't know, let's just say Enphase today, and with you buy shares with your $10,000, and Enphase goes down 70%. That means that if you held on, you've lost $7,000, right? Because it's shares. So the play was more capital intensive, meaning you needed $10,000 to do it. And if you're right, great. But if you're wrong, your risk is more than the defined risk of the leap. So now, another point of contention that was made yesterday that I disagree that they are purporting is this. If you saw the debate, they said, yeah, Carlos, I believe is the one that made this specific example. If you have $10,000, you can buy 100 shares of X. However, that $10,000 can buy 4 contracts of X. And therefore, you have 400 shares or exposure to 400 shares as opposed to 100 shares. And like, yeah, if you want to YOLO it, that is true. If you want to YOLO it, that is true. But a savvy investor buys a leap that's congruent with the amount of money that they want to spend on the investment. If you buy a 3-year leap, this is what you do, guys. You have $10,000. You take $3,300 out, you buy a leap. You take that $6,700, you put it in a CD or something safe that'll get you some kind of return, whether it's 2%, 3%, 4%, whatever. Now that money is getting a minuscule of money, but it's not nothing. And your leap is giving you the right, but not the obligation, to buy the shares that you want to invest in once it's about to expire. Now, you're going to need capital for that, right? Well, if your leap is up, you get the right but not the obligation to, like, for instance, if you have $100 strike price and in 3 years X stock goes to, or XYZ stock goes to $200, right? You've just, your leap is worth a lot more than it was when you bought it, but you get the right to buy 100 shares at the $100, not $200. So now, if you want to continue to be an investor, and this is what I was talking about yesterday, you exercise the motherfucking leap, right? You exercise the leap. Your cost basis is adjusted to the strike price plus whatever you paid, which in this example was $33.30. So if the strike price is 100 and the premium you paid was $33.30, your strike your cost basis of the stock when you exercise it on your brokerage is now 133.33, right? Not 200. It'll show your cost basis is 133.33. You pay no capital gains on the difference between 133 and 200 because it's up almost $70 because it's not realized yet. That's the beauty of investing through options. You don't have to realize a gain if you're an investor, which is what I was trying to convey. However, if you're a trader or don't want to invest for whatever reason, you can sell the option, right? Now, that profit that you made is yours, but that's a realized profit, and now you have to pay what's called capital gains tax. You see, one way has no tax implication, and one way does. Plain and simple, right? But I couldn't say all those things yesterday because it takes me too long to say stuff. But what they were saying is you should buy, if you find a great company, yeah, first off, define to me how you know it's a great company. But let's say you're wrong. Now you lose 100% of your $10,000 because a leap has an expiration date. And if it expires worthless, you've just lost all your money. So in short, buying leaps for investors are a great tool if used correctly. If you follow their logic and fucking YOLO it, you're going to learn the hard way that options, which is why they get a bad name, when used incorrectly, can be very bad. All right. I'm going to go to the comments now because I still have 20 people somehow, even though I don't speak succinctly. See what you guys are saying. Okay. Okay, I love you too, Kelly. I said that. All right. So Kane, Gabe time. Appreciate you, man. Thank you. You're not annoying, Gabe. Fuck the haters. Yeah, thank you, Kelly. But I agree. Fuck the haters. Fuck them all. I don't give a fuck. Haha. My Cubano brother. Love the shit talking. I didn't come here to shit talk, but I guess there's no avoiding it. I guess it does come off as shit talking, but they're not bad people. But I am kind of pissed that they took a lot of the things I said out of context. I'm pissed that they misconstrued what I said, didn't understand what I said. I mean, the list goes on and on. I don't know if Kelly streams. Nah, she's way too shy. Okay, star by star, concurred about something. Okay, are you buying Palantir here? Are you excited about it possibly getting into the S&P 500? I am not adding to my Palantir position. All of my position, Kelly, is by way of writing what's called cash secured puts. And I'm not writing more right here. It's technically overvalued. And I am, listen, long story short, I believe Palantir saved my life, and I know it saved a lot of people's lives. But as an investor that knows what the fuck he's doing, or trader, whatever you want to box you want to put me in, it's just not technically and fundamentally sound yet. But that time will come. Palantir will, at some point, I don't know when, they will go inverse the S&P, because stagflation is coming, everyone. And I know I sound like a perma bear, which I'm not, but we are going to get into a recession at some point. But anyway, or selling Palantir puts. Okay, you got me. No, I'm not. All right. Yo, I want to know more about Leaps. Make a video. There's just so much, man. There's so much. There's so much. Join my Patreon, Kane. I've created a course. I'm almost done with all of it. As a member of the Patreon, you get my basically Investor 101, where I try to teach you how to evaluate and do things. And you have nothing to lose, Kane. If you join my Patreon for $25 a month, you have 30 days money back guarantee, right? So you get everything I offer. We do Zoom calls, etc., and one-on-ones. And if you don't like it after the first 30 days, you get your money back. So you have nothing to lose, everything to gain. So join my Patreon. Just look me up on Patreon. It's GS Strategies, just like my name. And at some point, I'll add the link to the description. I believe we have good mutual respect for one another. That being said, I completely disagree with your expiration strike choices in. I want a much lower delta for that gamma gains as well as short. Okay, so if you want a low delta, right? So a delta, I'm not going to question your intelligence. You know what a delta is, right? If you are bullish, if you are bullish, you want to buy in the money calls with a great delta, right? That way, if you're right, that delta only rises, which means that the that the value of the call, I'm talking about leap calls, by the way, the value of the call is almost 1-to-1, meaning if there's a dollar raise in the underlying stock, if you have a delta of 70, your call is going to go up up in value 70 cents. Eventually, if you're right and it continues to go up, and the extrinsic value eventually will be 1, right? Now, well, depending with time, you can go higher than 1, but then for every dollar, you're getting $1 or more. That has a better chance of happening with a high delta. So riddle me this, Fuckbucker. And the reason I have these rules when I buy my leaps is if you can buy 100 shares of something for $10,000, right? But at the same time, you can buy a leap call for $3,300. That, in effect, is giving you you are getting access to 100 shares at 33% of the capital needed of buying shares. But because you have a high delta, in this case 70, let's say, you are profiting off of 70% of the move, meaning you're paying 33% of the capital needed, but get to profit 70% of the move. So if it goes up $1, you make 70 cents per share. If it goes up $10 with a delta of 70, you make $7 per share, right? So my delta rationale, and I've really been doing this for many years, which Fut, I know you respect me and I respect you too, man. But as far from an investing perspective, not a trading perspective, an investing perspective, one of my like sure rules are 70 delta, 70 to 80 delta is one of my rules, and it must be 33% at the most capital required. And if it's less, it's even better, depending on the fundamentals. But Thank you for your comment. Dated contracts. Fuck my life. I've been buying shares and forgetting about it. I need to be buying leaps. Kane, don't do it until you know what the fuck you're doing, because you can very easily screw yourself. Shorter. Oh, shorter time. No. An investor should buy the most amount of time as possible if the price is right. I'm gonna buy leaps on ENVX. Don't know it. All right. Fuckbucker gave me the happy face. Is this the Q&A segment? If so, thoughts on Sofi? I got you. I'm almost there, Ricky. Almost there. In the Money has really good videos on options. Yes, In the Money has great videos on options. Yes, delta can't go above 1. Therefore, I want a lower delta that will increase secondary Greek gamma, increases delta. Yes, gamma amplifies delta. And I'm not saying this for you because I know you know. This is for everyone else. So a gamma of whatever will increase favorably or unfavorably the delta, right? So if you have a delta of 70 and a gamma of 10, that gamma, because this is one of the things called the Greeks, will in a way basically make your delta 80. But gamma is more temporary than delta is, but I digress. See, you are telling me things from a trader's perspective, and I'm not saying you're wrong. I am talking from an investor's perspective. I want my call to go through my chosen strike for the exponential gains. You, Futbucker, have never exercised a call. Again, you are talking from trading perspective, not investing perspective. 70 delta really equals 70 shares, not 100, since it's 0.70 per $1 increase. I don't think I understand what you're saying. A delta of 70 gives you 70% of the move. So if the move is $1 increase, each share increases in value by 70 cents, each share of the contract, which means the contract, if the contract when you bought it cost $30, okay, and then the underlying stock, $30 a share, or $3,000 a contract. If the underlying stock goes up $1 with a delta of 70, the underlying stock went up $1, but the call contract went up 70 cents. That's how that works, Futbucker. That's how that works. All right, that's all the questions. We're going to go ahead and start closing this out. 48 minutes. Thanks, everyone. There was other things I wanted to say, but I can't remember. So in closing, the reason I did this is because I believe that Vitaly and Carlos, as intelligent as I know they are, as successful as I know they are, when it comes to Enphase, they have crossed over into the realm of delusional bull. They've crossed over. And I know that because Vitaly has no exit strategy. He has never once said, if this happens, then I will sell my shares, whether it's trailing stop loss, whether it's fundamental thesis, right? And also the reason I know that is because when I explained to him about the complete and utter, I can't say fraud because it wasn't, douchebaggery that the insiders did to shareholders, he protected them, right? So with all that said, right? With all that said, other than like not really understanding my point of view, not really allowing me to finish my thought without fucking going somewhere else and fucking completely railing the conversation, and now we have to talk about something else. I want to conclude with what I want you guys to take away from this. And that is, if you're going to invest in individual companies, you need to do more homework. There's a lot of information you don't know. And I'm sorry to be so vague, but the truth of the matter is, if you're not investing in the S&P 500 or the Nasdaq 100 as a retirement vehicle, if you're investing in companies that you like for whatever reason, right? That's a personal decision. You need to have an exit strategy, because selling is far and away the hardest thing when it comes to trading or investing. Okay? You it's a skill. It's a skill. You have to learn why I should sell, how I should sell, right? And then you have to have some kind of pragmatic, logical approach to your thesis. You can be bullish all day long. You can be flabbergasted in positivity for what they're doing and the management and this and that and the third, right? All that is possible. You can have all of that, but never cross into the realm of delusion, like I won't even do with Palantir. Okay? Always have a reason. Oh, I can't forget, because Ricky on Twitter, he was very kind to me. So Ricky's going to go first. If he's the only one, so be it. But for Ricky, I am going to look at Sofi right now for Ricky, and I will take a couple. I will take a couple requests, because I do love doing this. If you guys have stocks you want me to look at, and if not, we'll end the stream. But so the first thing I'm going to do with Sofi is I'm going to pull up one of the greatest. Listen, if you don't use FinViz, you need to. I tell my Patreon almost daily. I pay for it. It's like $200 something a year. Well worth it. Because this has a really quick and it's a quick, easy way to do fundamental analysis. So let's look at Sofi. All right. Okay, so right here we're going to get into Sofi. So what do we know? Okay, they are not profitable. They have a $5.36 billion market cap. And Sofi, I want you guys to understand this. Sofi is like a bank, not quite, but like. Now, there are many ways to evaluate a company, but I've said this over and over and over again, and you can fact check me on this. The main way to evaluate a bank stock, right? Not insurance stock, not growth stock, bank stock, is with this thing called price to book. This is the price to book ratio. Price to book, what that means is it gets your assets. So let's say you have assets of $100, and let's say you have liabilities of $50, right? After your liabilities are paid with your assets, theoretically, you now have leftover assets of 50, right? So you have a market cap of 50. If your market cap is 50 because your assets after paying your liabilities are 50, then you have a price to book of 1.0. If you have a price to book higher than 1.0, let's say 2, okay? A price to book of 2 means that your market cap is double what your assets are after your liabilities are paid. So for example, if I have if my company is worth, if my company has assets of $100, and my debt is my debt is, let's say, $50. Okay, we'll keep it at 50. So my My assets are 100, my debts are 50. After I pay my assets off, I have $50 left, right? But let's say my market cap, this number, after I have $50 left, let's say my market cap is 100. If my market cap is 100 and my assets after liabilities are paid are 50, that means that my price to book is 2.0 because my market cap is double. Now, conversely, if this number, which it is, I'll show you a couple, right? I'll give you guys a bonus. I'll show you one of the only stocks that I am actually going long today in my trading account by way of cash secured puts, but it's still a long play, and I'll show you why. So SoFi has a price to book of 1.02, right? So believe it or not, 1.02 as far as banks are concerned are not that great. So like if we look at Wells Fargo has a price to book lower than 1.02. If we look at Bank of America also has a price to book of less than 1.02. Let's look at JPM. JPM has a price to book of 1.54. Now, JPM has always been able to garner more because it's like a great stock. Like JPM is the best bank stock of all the banks. And so because of that, they've been able to demand a higher price to book norm. So anyway, back to SoFi. So from a price to book standpoint of SoFi, which isn't profitable, right? 1.02 is not great because I have no idea when they'll be profitable, right? And even when they'll be profitable, how profitable will they be and how long will it take? So if they keep you see how they didn't dilute and then they did shareholder equity, they did a buyback, but then look at this, they probably did a capital raise or they did some fucking stock-based compensation. So now they diluted shareholders. And when you do a capital raise, that's what happened. When we look at EPS, they had a really bad year in 2021, but in 2022, they're basically on par. Their sales, or what's constituted as sales, is doing well for 2022, but can they keep it up? Like, I don't know. I haven't done a deep dive, right? So then we also I like to go back and I want to see what insiders are doing. All right, insiders are buying. So that's bullish, right? Some insider sales, but there's far and away more buying. But I don't have time to look at these, but sometimes they put them as a buy when it's really an option exercise. I don't know if this is buying with actual dollars or not, but it's not horrible. It's not all red. So long story short, I don't like it fundamentally, right? But let's look at it. Technically, right? Because I want to give you the I really appreciate people that get my back, Ricky. And I saw your comment on Twitter. I think it was you, and I appreciate it. So thank you. Okay. So here are my notes. I know you guys aren't going to understand it. I said I think SoFi will close the gap at 602. And I said that a long time ago, and it sure fucking did close the gap. Look at this gap at 602. This gap at 602. I probably said that when it was down here. Look what it did. It fucking closed the gap. I mean, technicals. Listen, this is not luck, guys. I don't make money every year because I'm fucking lucky. I know what the fuck I'm talking about. Look at this gap. It was closed. All right, they closed the gap. So now that they closed the gap, now they don't have any magnet pushing up to the upside. So now when we do when we zoom out, okay, I know you guys. Okay, so as far as the Lux Algo Cloud and the Nadaraya, which is just going to confuse you guys, let me take it off so you're not confused. It's basically in the middle, so it means nothing. It's not oversold, it's not overbought, it's like right in the middle, right? The Bears have control. Okay, I definitely think it's going to go down to at least 530 because that's a 23.6 Fibonacci level. That's going to be a hard support line. Let me see where the SMAs are. All right, it's at the 20, the 50 is above it. Okay, the 100 is below it. Where's the 200? Okay, it's on the 200. So it's on the 200. That's why it's stalling. Um, I do believe it's going to come down to at least 550. But depending on where the RSI is, this. Depending where the RSI is when it does continue to fall, and then when we correlate that to what the price to book is at that point for this unprofitable company, it has more to go. Strong support is this bottom over here at this Fibonacci level, which is what I use for the swing low, and that is 429. At 429, I would definitely write puts on Sofi because I believe at 429, which is $1.50 away. $1.50 away will give it $1.50 is 20%. Yeah, $1.50 will give it a price to book of around 0.80. And I would love to make a play on Sofi when it's oversold and has a price to book lower than 0.85, 0.90, because then by writing cash secured puts, you are guaranteeing that if exercised, your cost basis is at a price to book that is a really good entry, and you have you de-risk your position, so you made it so that one of two things happen: either you get paid the premium and the stock goes up and you lose out on possible gains, but you were playing it safe and at least you get to keep the premium from the cash secure put, or you get exercised and now you get to own a stock that you want to own at a better price than if you just bought shares today. So yeah. Okay, so hopefully you liked it. Okay. Oh, Adam's here. Hey, Adam. It's my only crypto friend. Adam, I'm mad at you. You stopped doing the Monday calls with me. Pissed at you. Okay, so where did I stop off? Fuck. You guys have been fucking writing a lot. Okay, the delta, blah blah blah. I want my call to go through my chosen strike. Okay, blah blah blah. We talked about that already. He took profits at 300 though. Yeah, I don't know why. This was good. I'm glad. Thank you. It's based on a stock price, nonetheless. Whatever. I don't know. I can't tell him what to do. Yeah, did a year of homework. Okay, good for him. Yes, Kelly, he sold a big chunk around because it was overvalued. I would love for him to tell us what metric he used for overvalue, which is smart. Although his remaining shares he could protected with cost less collar and now be adding shares back for cheap. So listen, he could have done a lot of things. He could have sold covered calls. He could have bought protective puts, but by far and away from that shitty stock, selling was the smartest thing. So that's a bit of an exit strategy. Okay. I don't think V even touches options. I don't know. Shout out. Oh, there he is. Adam, my buddy. Hey, buddy. Show us Palantir. Always love your perspective. Okay, I will look at Palantir next. Hey, Adam. Hey, he should allow is not difficult. Well, one can seek advice for something like that. Simply put, you sell a covered call and use the money you receive to buy a put of the same cost, same expiration date. Yeah, that's called the strategy. It's one strategy, simply put. Gabe, do you only invest based on TA? Do you not look at the product the company makes and think about total addressable market and possible monopoly? The short answer is I do all of that, and I don't only invest on technical analysis. I also look at fundamentals. Like I'm the type of trader that not only utilizes fundamental analysis but also technical analysis to come to a conclusion. So anyway, yeah. And by the way, I told them yesterday that Enphase is going to do shitty on their earnings report, and sure enough, they did. Yep, it went like a limp noodle. Yeah, they sucked dick. Would also like to know what your biggest conviction stock is for the long term. Oh, that reminds me to show you guys a stock. So I'm gonna look at Palantir next, and then I'm gonna show you guys a stock. I'm not gonna tell you. I'm just gonna show you. I really don't have one at this point. Listen, I'm very bearish, man. The macro is deteriorating quick. Stagflation is imminent. There's very short plays that, like in my 401k, I'm 100% money market. That basically means all cash. I'm getting whatever yield the money market is giving me. So sorry I can't answer your question better. Thank you for the analysis. Thank you, Ricky. Okay, smart money, Intel or Nvidia? Nvidia. I'm shorting Nvidia. I'm down like I made some of it back today. I was down upwards of 25K. I'm only down like I think like 16K now. But I'm shorting Nvidia through long dated puts. Which I don't normally do, but I thought yeah, I was just a little bit early on Nvidia, but I still think it's gonna go down. So I don't like definitely don't like Intel, and I definitely don't like Nvidia at this price. I think it's a meme stock with this AI bullshit. I'm not saying AI is bullshit, but it's not going to drive the fundamentals so much to demand the price. What just fucking some ridiculously low graded analyst gave Nvidia a fucking 355 target, which was absolutely just nonsensical. Look, guys. It has like after today's fall, this motherfucker still has 150 PE. This is based all on meme stock bubble bullshit. Okay, you see this huge gap it created. It hasn't been closed. Mark my words. This gap before this year is over is going to be filled, and that's why I am not closing my motherfucking put because it's going to be filled, and I am going to make money. I digress. All right, Kane said, "Gotcha. How often do you work out?" I've been slacking lately, but I try to do it 4 times a week. But I've been slacking. Kelly's scoping out the guys. Guns. I didn't know I had guns. They're not that big. No, they're not big. No, I used to be a fucking stud muffin. Not anymore. Yeah, 355. No fucking joke. I'm not making this shit up. I'll show you. This is Nvidia. Dun, 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 dun. Where the fuck is it? What the fuck is going on? Google, mother effer. Cheese and rice. Come on. Where's the fucking retarded analyst? What fucking. Yeah, there's tip ranks. I'll find him on here. This fucking douchebag. Wait till you see it. Analyst forecast. Look at that. You see, there's 355. But wait till you see the fucking analyst that did it. Look. This analyst, he's good. He's good for Stacy Radna, but watch this. Oh, don't tell me. Come on. Mother of pearl. I used to pay for this bullshit, but I don't. Anyway, I showed everyone the other day. He was really garbage. He was garbage. He was like half of 1 star. He was just a garbage analyst. But anyway, yeah, true story. I hate it when I go gym. All girls look at me. I can testify to that. Gabe was a stud muffin, and still, oh gosh. And I forget them when I see them out. Sounds like a first world problem. In the same boat. Yeah, they both suck. All right. All right. So the next stock we're going to look at, I'm going to do at least two more, which is Palantir, and then my gift to you guys to put on your radar. Okay. Because most people like to go long, not short like me. Okay. I'm going to give you a non delusional factual approach. Okay. So pros, no debt. Market cap is 16 billion. Cash on hand is 1.26 of the 774 is cash, so that's good. The price to book is extremely high. This is an extremely high price to book for a speculative company. My counter to that is that I believe in the product, right? So I can't really say much more, but then someone can argue that I'm being delusional, and I would agree. So these fundamentals and technicals are not those of a stock that you should go YOLO on, right? Okay, so what's good? Okay, so we have two good and one bad. Let me explain. So with a growth with a growth stock, one of the best ways, in my opinion, to evaluate a growth stock is something called PSG, um, uh, uh, price to price to sales growth, right? PSG. And this is something that we've had a Zoom call in my Patreon to show you how to do it, right? I'm not going to do it right now, so I'm just doing this by what I see. So the free cash flow is really bad. The price to book is really bad, but here are the goods. Okay, so the earnings per share year over year, except for this bad year of 2020, is getting better. So in 2022, they had the best earnings per share, and a good company will go less and less and less, and then sooner or later turn green. That's what we want. Now, that could only happen if this happens. You see this staircase? These are sales. Good companies with good who that are not profitable, but they're good or good growth companies have what's called you know better, on average year over year sales. So their sales are increasing. It's like a stair ladder. That is good. So this is good and this is good. So now this is bad. This is the opposite of providing shareholder equity. This, being a bigger number, makes this harder to turn green because they are basically adding slices of pizza to your pie. And every piece of pie that you own is technically worth less, right? So the dilution is bad. The debt is good, or lack thereof. The EPS improvement, good. Sales improvement, good. Shares outstanding, dilution, bad. Price to book, bad. Here, I want you guys to know something. And I actually, this is how I know that nobody in there yesterday knew what the fuck they were talking about, because they gave me a forward PE. You guys know what a forward PE is? A forward PE is what a shitty, stupid bunch of analysts think is going to happen. But we're in a macro that's about to go, all right? So this number means nothing. This number, it doesn't matter what the fuck it says. So all in all, I got to look at it technically. Hold on. Let me look at it technically too. Okay. So I am, believe it or not, I know it doesn't sound like it. But I am a Palantir bull, right? But even so, people in my Patreon, and I wish Zach was in here. He's someone in my Patreon. He has shares. And when it did this, I said, Zach, sell some covered calls, make some premium, because it is overbought as a motherfucker. When I say overbought, I mean the RSI is above 70. Okay, so Let me turn this on. I know you guys aren't really going to care, but I love these indicators, so I just turn them on. Okay. All right. I have a puppy. I don't know if you guys can hear it, but he's playing with my other dog. All right, so we're getting down there. We're getting down there. Holy macaroni! That Fibonacci retracement lever. I can't use that. Which one am I going to use? I'll use this one. All right, I'll use this one. All right, this is the quick version of. Okay, so we're too low. Okay, so basically using a swing high of this level, which is not the ultimate swing high, because the ultimate swing high is just all the way up there, and I'm not going to use that one. Man, my fellow Palantir Bulls are not going to like me very much. It's the only group of people that I had left. No one likes a bear. Okay. If we consolidate below this level, that is bad, guys. If we consolidate before this level, that means the next strong level of support is all the way down here at $5.92. I'm not saying it's going to get there. I'm just saying that's the next strong level of support. We got the 200-day above us. We almost have, I think that's the 100-day moving average. So the 100-day moving average is, we're literally at it. Okay. If we break it, we're going to free fall, my friends, or we can, to this level, to 5. Okay. So what is my 2 cents? Here are my 2 cents. If you, for whatever reason that I have my reasons, for whatever reasons that you say Palantir is a good stock to own that you want to invest in, and I don't disagree with you if you think that. Remember, I am bullish. I would, given that the macro environment is poopy right now, I would say that the only reason that I can advise, even though this is not financial advice, the only way that I can give you my opinion, or that I would go long on Palantir, would be by way of cash secured puts. So I know a lot of you don't really know what I mean, so I am going to show you really quick. Okay. So we're going to go to this website, optionsprofitcalculator.com. It's an amazing website. Okay. And we're going to the cash secured put. We're going to put in Palantir here, right? And then we're going to be the writer or seller. And then we're going to pick two things. We're going to pick a time way out in the future, and we're going to pick a strike that's lower than the current price, right? So I don't want to go to January 2025. So let's go to June 2024, right? A little bit more than a year. Okay, the current price is $7.91. Okay. A $5 strike with premium paid to us of 54 cents will give us a cost basis of $4.46. That means if exercised, we are owning shares of Palantir at $4.46. Now, I'm not going to belabor my rules to you, but let's just say that it barely met my rule for writing cash secured put. So, in my opinion, in my humble opinion, not financial advice, if you were to go long Palantir today, I would recommend doing it by way of cash secured put, because one of two things are going to happen. You're either going to A, own the shares of Palantir, and that's only going to happen if Palantir goes lower than $5 on 21 June 2024. If Palantir is lower than $5, you are going to own actual shares. If it is not lower than $5 on that date, well, then you get to keep this $54 of premium paid to you. Remember, your risk is only $446, right? So because 446 is your risk, you made 12.1% on your money. So it's like you made 12.1% on your swing trade, if you will, right? So if it's above $5, you just made 12.1%. If it's below $5, you got to own the stock that you wanted to own anyway at $4.46. And that is how I would play Palantir. Okay, so I'm going to go to questions right after this. I do want to show you guys what I think is a diamond in the rough. If you follow me on Twitter, I definitely said something about it. But if you don't, now you get to see it. So, a company that I think is extremely undervalued, and I will define that for you, is a stock that I know you guys have heard of and once was a meme stock, and that stock is Nano Dimensions. Mind blown, right? So, why am I extremely bullish on Nano Dimensions? So, the reason that the stock is like in a consolidation area where, despite the fundamentals which I'm about to show you, doesn't like make any sense, is because they have some court drama going on. It is not like extremely detrimental to the company, but it's just some like board stuff. You can look it up yourself. You'll see that it's kind of stupid, but it is something, right? So investors are weary, right? But this is a great opportunity, and I'm going to show you why. And even with this great opportunity, I'm not buying shares. Even with this great opportunity, I am utilizing the magic of cash secured puts in order to get paid to own shares of this company. So remember what I told you about price to book? Well, look at this. Bam! Nano Dimensions has a price to book of 0.53. Why, you ask, does Nano Dimension have a price to book of 0.53? Well, I'll tell you. So, Nano Dimensions used to be a meme stock, but their very intelligent management knew that they were overvalued, and they took advantage of said meme stock pricing and did, it was either 10 or 12 capital raises. That is where they sold shares at their valuation as high as like 15, as low as like 10, I believe, $10 a share, which they were overvalued at, and got lots and lots and lots of cash. So now what they are doing is they are consolidating, right? And this is called a falling wedge pattern, a consolidating falling wedge pattern, if you will. This is a very bullish pattern because this pattern, most of the time, but not always, breaks out to the upside. So what I mean by that is that Nano Dimensions will travel in this wedge, ping, ping, like a ping pong, ping, pong, ping, pong, ping. Oops. Ping, pong, ping, pong. And then it'll do that. It can happen all the way over here. And then eventually it'll be like, F you, mother effer. And then just go to the upside. Right? So I did a strategy called the synthetic long, but it was like a synthetic long. I wrote 150 puts and bought 50 calls. So the premium I made from the puts that I wrote, that will give me an even better cost basis if exercised at a price to book of 0.53. I use that premium to buy calls that are like far expirations. So if it does break out, those calls are going to be gold, right? And then my puts are going to, the puts that I wrote are going to go up in value so much that I can close them up for pennies on the dollar. So it's a win-win. I got paid to own something that I think is undervalued. And then with that money that I got paid, I bought calls, right? So put this on your watch list. Do your research. Oh, but let me give you the beautiful. This is beautiful. Okay. So this is great. So the current market cap, are you guys ready for this? You're not going to believe me. Look it up. Fact check me on this. The current market cap of Nano Dimensions is $592 million. Okay? $592 million. The cash, not assets. Well, it is an asset, but it's the best kind of asset because you can't devalue cash, technically, right? If you have $100, you have $100 worth of assets. You get where I'm going with this? Okay, so the cash on hand of Nano Dimensions, if I remember correctly, fudge. Oh, was it over $1 billion? I want to say over $1 billion. I'm really sure it's over $1 billion. The cash, the cash on assets, I'm pretty sure it's over $1 billion. Their cash is over $1 billion. Their cash and their debts are extremely low. So their assets, which is mostly cash, is giving them a price to book of 0.53. So there's all kinds of assets. You have machinery, equipment, real estate, gold, investments, and cash, right? Their assets are mostly cash. So it's like a super de-risked entry because they're not going out of business anytime soon. From the research I did do, they're doing great things. So long story short, both with the technical analysis that I showed you guys, with this consolidating wedge, right? You know, they're being kept down because of this lawsuit. And their fundamentals are amazing. Yeah, they're not profitable, guys. I'm not trying to say that they are, but their market cap speaks for itself. They have more cash in the bank than their market cap is. That's crazy. Now we go to fundamentals. Look at their EPS getting smaller and smaller. Eventually, it is going to turn green. I firmly believe that. Look at their sales. It's growing. It's growing. Bam, bam, bam. 3 years in a row. Now, in 2022, not in 2023, in 2022, they did dilute 10 million shares in 2022. I believe the last time they diluted was like, I'm not 100%, but it was somewhere around here. No, that's 2021. 2020, there it is, 2022. Somewhere. Okay. So, damn, they diluted in the fucking, why did they dilute in 2022? That's ridiculous. I'll have to look at the 10Q. I don't know why they would dilute in 20. I thought they only diluted in this area. So I'm glad I'm glad I found that. But they did dilute. It could be only 10 million shares because of stock-based compensation. It could be capital raise, but they don't need money. So I don't know why they would do a capital raise. But they did dilute, right? Or they did dilute. So it's not crazy. So all the crazy dilution, as you can see, was done, you know, in 2020, they had 42 million shares float. And in 2021, they went all the way up to 247. That's because they did all those capital raises and got all the cash that they have. So long story short, okay, this is my diamond in the rough. Long story short, okay. Was there another stock I said I was going to do for someone? All right, I'm going to go to the comments, see if I missed anything, and then if there's any more. Oh, Ricky, why the short? Yeah, I'm shorting ISEE, mainly just technicals. And their fundamentals don't line up. So, but you guys aren't going to understand. I'll show you, but if you don't know, you don't know. Okay, so so this is it's called the Lux. I call it the Lux Algo Cloud, and I call this dark red area the oh shit zone, right? This is extremely overbought by that algorithm. Then this green dots, this is called the Nadaraya envelope, and this is like a great way of knowing when something is overbought, right? And then you have RSI, right? So when all three of your overbought metrics line up because it goes parabolic. Oh, and by the way, it created a rising wedge, right? It created a rising wedge. It broke out of that rising wedge. But what's funny is that this candle was mainly short interest, and that was proven by the short interest and how much more short interest was added on this candle, right? So this is like a fake breakout because it was basically shorts piling in, and that's shares, not buy options. So what I predict is that this rising wedge, which is a bearish pattern, when coupled with the high RSI of over 70, which at its highest point was 78, and then in my oh shit area of the Lux Algo plus the very tippity tip top of the Nadaraya envelope, this is a short. So I don't just short only based on technicals. I do look at fundamentals. And when I looked at the fundamentals, you'll see they're garbage. Price of book of 7, not profitable, right? EPS sucks. No sales because this is some stupid biotech company that I'm not buying. They're diluting like crazy. Like, it doesn't line up. I don't give a fuck what like thing they did that made it go parabolic. It's gonna come crashing down. Last but not least, it created a big old gap right here, and gaps are always filled. So when you add the fundamentals suck, the technicals suck, the gap, this, that, and the third, short it all day. So that's why I'm shorting it. Hopefully that answered your question. Oh, link to my Patreon. Okay. There it is. That's my Patreon. Ricky, I hope you join. You have nothing to lose. Okay. Okay. So where were we? I can testify to that. Oh, you already said that. Sorry. No, laughing my ass off. Hunter Vaughn. What is the product? What product? I already explained the short. Hence why Palantir. Laugh out loud. Hunter Vaughn. Their software. Well, yeah, but that is that. No, it's their AI and their Intel plus a host of things that you don't understand, plus their entry to market that we will never fully grasp. I mean, I can go on and on. Like Palantir is one of the few companies that you can never really do deep dive fundamental analysis because we don't know it. My needy dog is right next to me. If you're wondering what I'm patting. Link to your Patreon. Yep, thank you. Link to your own. Jesus Christ. I don't. Why the hell do I need an admin, Kelly? I don't need an admin. Look, I have 16 people. I don't need an admin. I look best in blue. What the fuck? Same. Okay, I'm listening. Okay, I'm glad you're listening. Enterprise value is so cheap, it gives them a long runway for improvements, innovations, M&A. In 2019, I made bank sell covered calls with Nano Dimensions. Yeah, hopefully you sold before the shit tanked. It was roughly 1.2 billion a couple months ago, from my recollection. Yeah, correct, Mark. I do remember that now. How is that possible, man? Yeah, I know it's crazy, right, Kelly? It is nuts. When I saw that, I was like, "Holy shit!" Yeah, for real. If I remember correctly, they were worth 5 per share based on assets. Well, I don't know what the fuck you're talking about. Because based on assets, okay, based on assets, they are less. They are 4.51. $4.51 a share. Currently trading at $2.39 a share. Sorry for cursing. Oh, wait, that's my Patreon. And Palantir. All right, I already went through Palantir. All right, an hour and 35 minutes. Been a long time. You guys been great. We dropped down to 16 for the first time. That means for like an hour and something, I had steady 20 people here. This is awesome. This gives me motivation to start creating content again. It's just that there's only so many hours in a day. Like I'm studying for my CFA. I have to provide content for the Patreon. Like just like there's not enough time, man. And then I do get sidetracked. So there's that. Anywho, thank you everyone for being here. I truly hope that you learned at least something today. And thanks for the good questions. Have a good Tuesday. And I'll see you on Twitter or on a Mitt show in the morning or something, or Finance Junkies. Even though every time I go into Finance Junkies, I get upset. I always get upset. Like they just piss me off. But it is what it is. Anywho, yeah. Thanks, guys. I appreciate you. Have a good one.